Ladies and gentlemen, welcome back to the channel. AMC stock is up over 2% today. Wow. What in the world, AMC? That's actually crazy. We're going to get into what's going on today, what the data looks like, and why this is so crazy. Because, in fact, take a look at the Russell, Mr. Russell 2000, down 3.3437% today. So almost 3.5%. AMC should be down. I'm going to go out on a limb here and say about 10% today, just based on the correlation that you tend to see with the Russell and AMC. So what's going on? Why is AMC rallying as the rest of its peers are selling off? Hit the like button as well as subscribe to the channel. Let me know what you think about this information down below in the comment section. And why do you think AMC stock is in the green today? We could make some wild speculations that Adam Aron is going to give us a commitment to not diluting shareholders. That looks like a wild speculation at this point because Adam Aron does not want to do that, needs to do that. But I mean, we've seen Adam Aron make some pretty irrational choices and decisions over, the last couple of years. One of which was the photos that he sent to some woman. I mean, he just doesn't make the best choices. So we'll see when we do get that commitment to not diluting shareholders. But nonetheless, on a serious note, AMC stock is doing well today. Now, by the time you guys see this video, AMC could be higher, potentially lower. Markets are starting to come down as we speak. But here is your big news today. If you missed it, here you have it. And just a brief rundown, the Dow is down 1.3%, S&P is down 1.3%, and the NASDAQ is down 1.64%. I think today would be a lot worse if NVIDIA was actually doing worse as well. NVIDIA has been positive for most of the day today, just now going negative. But we'll see if NVIDIA really does start to kind of give it up. The rest of the day today could get quite interesting, to say the least. It was CPI. CPI was the big story for today. Prices rose more than expected in January as inflation won't go away. The Consumer Price Index increased 0.3% in January. The Bureau of Labor Statistics reported on a 12-month basis that came out to 3.1%, down from 3.4% in December. So your year-over-year continuing to decline. Your month-over-month came in little bit higher on your headline CPI. Now your core, let's see about core. I can't remember the exact numbers off the top of my head, so we'll just go back and look at the calendar and see exactly what core was. Core is the big one. Core is the important one, especially your core month over month. So core month over month came in at 0.4%. Yikes. That is an acceleration from last month's number of 0.3%. Year over year came in at 3.9% for core. Expectations were for about 3.7%. 3.9% is the same as last month. So on a year-on-year basis, roughly in line with last month as well. Month over month came in again at 0.3%. Estimates were 0.2%, and inflation year over year came in at 3.1%, and the estimate was about 2.9%. So across the board, inflation came in hotter than expected, but especially that month over month core, that's a rough number because, I mean, times 0.4 by 12 to get a, annualized 12-month number, and you're at 4.8% inflation. I mean, that's not a place where the Fed will feel comfortable cutting rates. So if we take a look at what the markets are pricing in for Fed policy, go ahead and give this a bit of a refresher. Definitely moving things around today. 7% chance of a cut in March, 93% chance of a pause. It's not going to happen. For May, you're still now pricing in a pause for May. 61.2% chance of a pause and 36.4% chance of a cut. Remember, we were pricing in the first cut in May for a long time now. For June, there's now a greater chance of a pause than for 2 rate cuts. We're still pricing in a 1 rate cut, the first rate cut in June, with odds of 51.2%. Now, I think you're going to have to see the data getting worse, showing more inflation is here and potentially getting even stickier to have the Fed not cut in June. It seems like June is likely to be the first cut, if not July. And why I say that is because I don't think the Fed wants to cut at every meeting. So even if they did not cut in June, then there's only 4 meetings left: July 31st, September 18th, November 7th, and December 18th. If we don't get the first rate cut in June, we're probably getting 2 rate cuts in 2024. And I mean, that really just depends on the course of inflation as well. If we continue to get CPI reports like that, we're probably not getting a cut at all. Okay. And I think that's something we have to be prepared for. Now, for the entirety of this year, markets are pricing in 1, 2, 3, 4 rate cuts for 2024. So that would imply, a cut in June, maybe a cut in July, skip September, cut in November, cut in December. So that's almost every meeting following June besides one. So we'll see. Definitely not great for interest rate sensitive names that have really been counting on some of these rate cuts coming as inflation has eased. Not great. One of the things that this article points out is shelter came in at 0.6% on the month, contributing more than 2/3 of the headline increase on a 12-month basis. Shelter rose 6%. Now, the Fed's not going to realize this. I don't even think the Fed knows this, but you probably don't see shelter inflation come down until the Fed actually starts to cut rates, right? When the Fed starts to cut rates, that means what? If you're a homeowner, you can go out and refinance, maybe sell your home, but definitely go out there and refinance, get a lower monthly payment, charge less for rent. I'll tell you right now, if any one of my properties, if I had let's say $1,000 mortgage on it, and I'm charging, let's say $1,500 a month for rent, which is actually pretty appropriate pricing. Well, if it stays like that, then fine. I might raise the rent $25 a year, or if it's a good tenant, there's some tenants I've never raised rent on before. And if the Fed starts cutting rates, and let's say I refinance and my mortgage is now $700, $750, then I'm definitely not going to raise rents. I could, even lower rents for good tenants, but I'm definitely not going to raise rents, at least for a while, right? So, yeah, without any action from the Fed on Fed policy, you're probably not going to get an improvement there. And that's probably going to continue to be a rough spot in the CPI reports. Now, let's take a look at specifically what's going on with AMC stock today. And there is no specific news, but I will say there was that advertisement for the Kingdom of the Planet of the Apes. Planet of the Apes movies are like one of my favorites of all time, the whole series. And that's getting some people a little bit more excited about the box office towards the end of this year, but really not anything specific that would justify such an outperformance of AMC compared to the Russell 2000 today. Now, if we take a look at the 10-year treasuries today, this is, something else that is negatively affecting the markets. 10-year treasury yields are up almost 12 basis points, sitting at 4.28%. So you're starting to get up there again on 10-year treasuries. That is really affecting your small cap stocks a lot because 30% of small cap debt is not fixed. So it's really correlated to what 10-year treasury yields do. So that's a big problem for small cap stocks today. Again, just a problem overall for the broader markets that have factored in at 1.7 rate cuts. Now we're down to 4. And you can make a logical case that if inflation continues to come in hot, then you're probably not going to get any rate cuts in 2024. Considering how strong the economy is, there's literally no rush for the Fed to start cutting rates at all. That's a problem for stocks that have been trading, based on we're getting 7 to 4 rate cuts for the entirety of 2024. So far. Now, let's take a look at the Ortex data here. You do have 12.36% short interest of free float, $141.16 million worth of short positions, days to cover 1.78, about 31 million shares that are currently sold short, 33.53 million shares that are currently out on loan, cost to borrow 1.04%, utilization of 49.3%, and a short score of 64.06 out of 100. Cost to borrow max sitting at about 2% as well. So data definitely getting better, looking more towards a short squeeze narrative. But obviously it needs to get a little bit higher, right? 12.3% short interest is pretty good, but once you start to actually get above like 20% is where things start to look pretty dang appealing for a potential short squeeze. Now, volume today, 78.5% to the call side, 21.5% to the put side. Open interest, 68% to the call side, and about 32% to the put side. And you do have one order totaling $50,000 with a positive order value of 0% from hedge funds and institutions today. So there you have that. But let's take a look at the stock twit sentiment barometers for AMC. And you're extremely bullish today at 83. Yesterday, you were extremely bullish at 88. But it's continuing today. Message volume is a lot higher than it was yesterday, though. Message volume yesterday was 37 out of 100. That is categorized as low. Today it's at 56 out of 100. That is categorized as high. And the participation ratio is increasing yet again to 43. Almost normal, but yeah, definitely seeing a lot more people talking about AMC today. And that is great news for AMC stock investors, for anyone that wants to see AMC stock do well. Now, the percent of stocks above their 50-day moving average today got crushed. You are seeing broad downside across the board. Now you're at 48.2% of stocks above their 50-day moving average. You've seen 11.5% of stocks total fall under their 50-day moving average today. This was a big, very important level for most stocks, and you just utterly got obliterated today and fell under your 50-day moving average. So definitely not a great sign. Could be a sign of more downside, but I will tell you right now, the markets were so overheated that this was really due and likely even a larger pullback. So you definitely want to keep your eyes on that one. Now, on a technical basis, AMC stock has an RSI of 50.32, which that is now categorized as neutral. AMC stock is $4.60 per share at the time of recording this video. Could be higher, could be lower by the time you are seeing it. AMC stock has been in the, even as high as $4.71 or so earlier in the day today. So, could see a pretty aggressive move by the end of the day. The MACD is also positive. I do think we have a pretty clean shot of upside to about $5.34 per share. That is your 50-day moving average. That's where I expect to see more resistance, but I think it really just depends. I don't think AMC is going to indefinitely outperform the broader markets here, not unless we get some good news from Adam Aaron. But as of right now, I mean, it's doing just that, really outperforming today. Now, 10 and 2-year yield curve inverted 29 basis points. That is a little bit less than yesterday of 31 basis points. That's actually a sign, of an inversion, which is a sign of, potentially a recession coming, although you're still too far off to make any crazy assumptions there. Now, Stonko tracker data, you still have about 30,000 calls currently in the money, 86,000 calls out the money. In the money puts at about 15,000, out the money puts at 39,000. So, yeah, still a decent amount of option activity for this week on really both sides here, but more to the call side. And well, if we continue to see a bullish AMC this week, that could be really good and still push almost 86,000 calls to go into the money. That's a lot of potential buying pressure. That's 8.6 million shares that would potentially need to be bought by market makers if all of those shares went into the money. Let me know what you think about this information down below in the comments section. That is going to go ahead and do it for this video. Thank you for watching. Enjoy the rest of your day, and I will see you in the next one.